Good morning, welcome to IG's early morning call. It's Friday, 21st of April. Let's take a look at the headlines as we wait the start of today's European session. We're focusing in, though, on the dollar, as it's looking as though it could well be set for its first week of gains after 7 weeks of losses. We'll take a look at what's been behind the turnaround. All this comes as it's been a big week for Tesla for a number of reasons, one of which Elon Musk won't want to be seeing, and that is that the stock is nearing a 3-month low, and it's broken some significant support in the process. All this as big investors question the strategy of sales over profit. And oil prices extend the weekly losses. It's the first weekly loss in 4. WTI and Brent both been hit hard this week as the market pulls back on some of the recent gains. Take a look at volatility. Third week in a row of gains, indicating that people wanting to reassess their exposure to risk. And as we'll see in just the next couple of charts or so, that we've got the indices, this is the FTSE 100, showing some signs that it wants to, well, it's certainly thinking about where next to go. It's just below the 7,900 level, the FTSE 100. The MACD on this chart here, you can see, is just beginning to roll over. Let me just expand that just to show you what's been going on here. It's not that the MAC is turning down. It's looking like it wants to roll over. But I think this is better illustrated if you look to what's happening on the German DAX. Losses yesterday, and we were given some support at this line at 15,742, which were the highs that we saw baked into the markets back on the 4th of April. So that prior resistance is now support. And you can see today we've opened with little move at yesterday's lows. But the MACD here is just about to turn over. Now, when that happens, I suspect there could well be some further downside to go. I'm waiting for a candle close below the 15,742 before taking a short position on this market. But you can see that since the October lows, we've seen this market up a whopping 34.79%. So I think some would say it's about time we see a little bit of money taken off the table, and there'll be lots of people desperately wanting to sell into some of these recent gains. And I think opportunities could well start to develop. I was talking earlier this week to Alfonso Picatiello, who was coming to us from the marketcompass.com. This interview is on the IG platform, and he was talking about these markets regressing back to the lows we saw back in October. So he's talking about many of these markets. He was talking about the S&P 500 particularly, but he said he'd feel happier if we saw this market pull back to this level before regrouping to move further on up. So far as some people are concerned, we are looking potentially at a market that could well see some unwinding of some of the recent highs. Again, same sort of percentage move up that we've seen from the French markets and the lows back in October to the recent highs. There's been a little bit less movement on the downside, I should say, for the French markets. We're holding nicely under the 7,500 level. We never actually quite got to the 7,600 level, but we did see new record highs this week. So again, many are sort of queuing up, I think, looking for an opportunity to sell down some of these markets. Let's look at what's been happening overnight in the Asia Pacific region across the board. We've seen losses there pretty much across the board. Hang Seng Stock Index has been one of the worst performers this week overall. It's down 1.25% on the session so far today. US trade yesterday closing out the session with the Dow losing a third of 1%. We saw AT&T down 10% yesterday, following on from earnings, and that was its worst single daily performance since the COVID lows that we had back in March 2020. S&P 500, Nasdaq Composite, all on the way down, and I think this is where we could well see some further downside to go. Look at the Dow beginning to pick up on the downside. Yesterday, we saw a drop down to levels not seen in more than a week, and then came a little bit of a pullback. But I think broadly speaking, we are looking potentially at moving this market further on down. This is the S&P 500. The recent high is not quite as high as the highs that we saw back in February. And I think this is what we were talking about earlier, about the fact that we could well then see a market that prefers to take us all the way down to these levels, not seen since the 13th of October. And that could give us a real good opportunity then to take this market higher. But at the moment, at least, the market's not too far away from some of the recent highs. Talking about the MACD on the European markets, the German DAX particularly, look at this. This is also just about to turn over. As soon as the blue line goes below the red dotted line, the MACD then starts to flash sell. And that would be an opportunity possibly maybe to move down on these markets. So if you are wanting to sell the S&P 500, let's take a trade on this. Your stop would go above the highs that we saw back on Monday this week at around about the 4,200 level, 41.25 is where we're trading at the moment. In terms of levels of support to watch out for, I think that would be the first level to watch out for, which is just a little bit above the 4,000 level. And then there's not much stopping it all the way down to the lows that we had back on the 13th of March at 38.08. So I think there is some potential downside to come for some of these markets. If we get a candle close below the 4,070, you may be feeling more comfortable going short on this market, and by then we'll have firm direction in terms of the downside potentially yet to come. Let's take a look at what's been happening in terms of some of the economic data out overnight here in the UK. We've seen GfK Consumer Confidence rising for the third month in a row to a negative 30 for the month of April. This is the highest reading since February 2022. Consumers' expectations for the UK economy in the next 12 months has hit a 15-month high. Joe Staten, he's GfK's Client Strategy Director, described this latest survey as a sudden flowering of optimism among households. The brighter views on what the general economy has in store for us could even be seen in the proverbial green shoots of recovery, according to Mr. Staten. And retail sales as well, falling 0.9% in March month on month, more than the 0.5% anticipated. Now, how do we weave in that consumer confidence thing? Quite sometimes you do get these little corners of economic numbers that do indicate markets that are looking further ahead than might otherwise be described by some of the economic data. And certainly it seems like if the Bank of England continues to raise interest rates, which has certainly been some of the expectation this week, we could well see this economy going into recession. So it's just a question of when you start to price in the recovery. This is sterling against the US dollar, just to show you what's been happening. I was talking about the dollar appreciating value this week. That was the back end of last week. We saw that. Since then, sterling has hit levels not seen since the 3rd of April. And then has come a little bit of a rebound midweek. So we are looking as though at the moment, at least, we could well end up sterling on the US dollar. But I think this is more to do with the fact that it's likely that the Bank of England will put its foot hard on the accelerator to bring more interest rate rises to ensure that it does try and find ways of making sure that it keeps on top of inflation, which as of this week still hasn't managed to do, with inflation still at 10%. Now, let's move on to take a look at other areas of the market and what is happening there. BHP is one of the stocks to watch at the start of today's session today. It was down 2.6% in Australia. BHP Group's iron ore output falling to 66.2 million tonnes in the first quarter, marginally below the 66.7 million tonnes produced during the same period this time last year. This is the world's largest listed miner, confirmed its annual forecast of 278 million tonnes to 290 million. Shares, as I say, down in Australia. This is the Australian market. You can see here a gap that opened up with the stock ending down 2.15%. So we're looking there potentially now for a drop in the London markets. Let's bring up the London traded shares of the stock. And if you look at a 2% drop at the start of today's session from that point down there, you are then at this line of the 200-day moving average, which is down here at 24.33. So that would be the opportunity there, perhaps maybe to look for some sort of support on the downside when you get this share open at the start of today's trade in London. Let's look at SAP as well, another stock to watch at the start of today's session. You can see in the last couple of weeks we've traded at levels not seen since the 26th of January. This is a stock where we come out with earnings this morning. I think there's a little bit of a disappointment coming through in terms of some of the headlines for SAP, just bringing out what we saw earlier this morning from the software house. It says it sees non-IFRS operating profit of between 8.6 to 8.9 billion euros. The previous estimates have been for 8.49 billion. So that is better than expected. Could we see a rise at the start today? It depends on whether or not your reading of the recent highs has built in what had been a strong set of numbers. Once again, it's all about the cloud servicing software that SAP has, which could provide some of the upside in its share price. Watching out for SAP at the start of today's session as well. Now, I just want to pick up on the headline we ran at the top about Tesla. And I want to explain a little bit more about what's been happening with the electric vehicle manufacturer. It's increased the prices for both versions of its Model S and Model X electric vehicles in the US. Now, this comes just days after slashing prices for the 6th time this year. This is really giving mixed messages for many around the electric vehicle space and for Tesla in particular. Let's bring up the share price chart because we've seen a break all sessions on the IG platform of that line of support I was talking about at 164. Yesterday, we closed down below that at levels not seen since the 27th of January. Now, all this will come as a surprise. Remember that Elon Musk said that less than 36 hours ago that Tesla would prioritize sales growth ahead of profit in a weak economy after cutting prices for a sixth time this year. The company posted its lowest quarterly gross margin in 2 years, and it missed market estimates. So there was a good reason to sell it down. This was I think it was an 8% drop, wasn't it, on the previous day? And yesterday, closing out all sessions, as I say, below that line of support. So where's the next line of support? You then have to go all the way back to the numbers back on the 6th of January. And that really, to be honest with you, is the next area of support to watch out for at 101.23. Now, that would be down a whopping $63 at $164 as of the $163 yesterday as of the close. It would be $62 below where we closed out yesterday's session is the next line of support for Tesla. I think these mixed messages are very confusing for investors and very confusing for traders. But I think if your short position is taken, your stop loss should go tightly in above the 100 period moving average, which is the blue line here. So you'll stop at around about $172. If you are short on this going into the session this morning, it'll open at 9 o'clock UK time, all sessions on the IG platform. Let's look ahead to earnings out a little bit later on today. Procter Gamble is on the slate. It owns a number of very, very high profile brands, including, as you can see here, Gillette. Expectations are for earnings per share at $1.32 before the market opens this morning, so you can trade this on the IG platform. It is a stock which trades all sessions. Revenue is forecast to reach $19.25 billion. Now, over the last 12 months, if we look at what's been happening with the Procter Gamble share price, it's fallen only about 3.5% after hitting lows in October. The stock rose about 15% in the last 6 months or so. And we closed out yesterday's all sessions trade at $151.33. It trades all sessions. It opens at 9 o'clock. This stock reports earnings before the bell today. Another one before the bell, which is not all sessions, is the oil field services company Schlumberger. Expectations are there for earnings per share of 60 cents on revenues at 7.45 billion. Let me just take a look at what else is happening in other areas of the market. I want to bring up a chart of what's going on with US crude. Now, it's been a week of real negativity for crude. You can see we capped out at the 200-day moving average and then pulled back recently down to the 100 period at 76.93. It hasn't yet closed this gap between the highs that we had and the gap that opened up between the 31st of March and the 3rd of April. Now, that weekend, you'll remember, was the weekend that we saw OPEC Plus agree to take an extra 1 million barrels of oil off the market. Since then, prices have risen. Inflation has been stoked again. People worried about the outlook for recession because of the rise in inflation, which is going to steer more central banks to raising interest rates, possibly even still the Fed, still to come later on this year. And then we get this pullback because of the outlook once again for the economy. We haven't yet closed that gap. A gap on technical analysis is a little bit like one of those itches that just won't go away, and you keep on scratching it until it actually happens. So I'd be happier. 76.87 is where we are. I'd be happier to see a trade at 75.76 before buying back into this. MACD pointing down, indicating to me that there is more of a concern about the outlook for economies now with the possible recessions for some of the big users of oil, and that itself could be a problem for the price of oil. So if you're short on this, at 76.87, stock goes above the 78 level, and that could well then see a break of this line of support of 75.76. Last week, you'll remember Baker Hughes' rig count fell by 2 to 588, although up by around about 8% from the same period last year. Natural gas fell by 1, which meant the total rig count fell by a margin of 3 at 748. The Baker Hughes rig count is out at 6 o'clock this evening. Just before we go on to take a look at gold, I want to return to this story at the top about what's happening with the dollar, because in this week we have seen a rise. It is only a marginal rise from where we started out the week, but nonetheless at 101.54. It is a rise on the session, which is the first rise for the week that we've seen in 7 weeks. Now, this climb has pushed down the price of gold, and gold very sensitive to some of the moves in the foreign exchange markets, especially with the dollar, because gold is priced in dollars. You'll see an inverse trade on this if you look at gold priced in sterling or gold priced in whatever other currency you choose. But because gold is priced in the benchmark market in dollars, when the dollar rises, gold falls. And you can see in today's session, we're now relatively substantially below the 2000 level. But this drop this week has come because of that reversal in fortunes of the dollar. If I was able to overlay the dollar chart on this, you'd see a complete inverse correlation to this. So I think so long as we get further gains for the dollar, and that is now what is being priced in for the foreseeable future at least, we could well see further downside. Now, where do we go in terms of downside? Well, I drew this earlier on in the week, this Fibonacci back here, and I'd be far happier buying into this market if we saw a pullback in gold down to around about 1897, and we'll continue to follow on with this on the early morning call next week. So this Fibonacci support at 1897 is a good area, I think, potentially to watch out for. And of course, if you're short on this at 1986, your stop goes above this area up here to around about the 2020 level for the price of gold. That's all to do with what's happening in the market for the dollar. Just one other area I want to follow up on. Look at this. This is New York sugar. London sugar is the same sort of thing. You can see on this chart here that we have now risen above the highs that we had back on the 15th of March. I don't think you're getting a pickup on this chart at the moment, but sugar is another area of the market to watch out for so far as this market is concerned. Let me just see if I can quickly get an updated connection for you when I'm talking about what's going on with the price of sugar. Price of sugar has this week been interesting because of its move, because of the limited supplies that there is. I think we're getting an opportunity to look at this market. Unfortunately, it doesn't look like I'm going to be able to change that trade, but sugar is up on the session in today's trade, and that is where we'll leave this early morning call this morning. Watch out for the chart in the markets at 10:30 this morning with my colleague Axel Rudolph.